Welcome, Internet Capitalists, to episode 29 of The Big Show. This is the last show of 2024. We're filming on Saturday the 28th, again, from Gibsonia, Pennsylvania, where the weather today is about 60 degrees, Ben. About 60 degrees.
Yeah.
I did some leaf raking in the front and back, yard cleanup, took a lot of stuff to Goodwill, cleaning up the house, things like that. It's a good time of year for that, and we're going to wrap up. We're going to put a bow, so to speak, on 2024.
Yeah, sounds good to me.
Yeah, so let's jump right in. I think the biggest thing that happened in the markets this year was Bitcoin essentially tripling. Or
We're not looking at the charts.
oh, you want to look at the charts? Yeah, we can look at the charts. Let's look at the charts.
Zoom out. Just turn. If you're going to talk about the prices, turn on the monthly candles or even the quarterly candles.
There's such a thing as monthly candles.
Yearly candles.
I
We
thought-
looked at the monthly candles last week.
It's a joke, my friend. That's a joke. I use the 15-minute candles.
Yeah, that's your problem.
I have a problem now. I have a problem now.
You do.
Is that what you're
It's
saying?
the type of thing you'll go big red candle, and it's like a 0.7% move in like a 15-minute candle, which is admittedly a big 15-minute candle, but it's just funny.
Yeah. Okay. All right. Bitcoin. I'm not even sure I know how to get to the 15-minute or the 1-hour candles.
I shall do it.
Okay, you can drive. All right. Well, this has been a busy week for us. You know, we got some requests from people that watch our show. We didn't even know watched. They wanted some more like personal time in the beginning, and you're against that for some reason.
I'm against that. I think that's for family friends. Family friends want to reach out. If you're watching this, reach out directly. We can just hop on a call. I don't think the broader audience cares too much. We're not that interesting.
We're not yet.
I don't think ever.
Ever? I think we are. But let's get back to crypto here. You have up, 3-month candles, and this is showing the beginning of 2024, which is right here.
It's funny because we were already in a bull market previously when we all thought we were in a bear market, but the bull market really started around here. Let's call it January 2023.
So we're 2 years
crazy.
in.
We're 2 years into the bull market, which is a good thing to remind yourself of because you might think we're earlier than we are when we're really not. And Bitcoin typically outperforms at the beginning of the cycle, and that's what we've seen so far. So if the patterns hold, we should see an ETH rally this year, which I think like the fundamentals are also supporting. So if you go by historical trends, fundamentals, we see ETH and then another altcoin move up along with ETH as it typically leads that market. So it's looking like that might hold right now, which would be crazy because the repeatability of the cycles is just uncanny at this point.
Yeah, so this is a 5x. We're at basically 4.5, 5x in the second year, 2 full year bull market run of Bitcoin, which is, that's basically about 200% annualized per year, which doesn't happen in traditional finance. Now, in the ETH chart, not quite as good, but not bad nonetheless. So this is about the same time. What January 2023 is about right there. Mm-hmm. ETH was at 1176.
Yeah,
and we're at 3,400 now, so 3x. ETH perennially gets fudded to death by the Bitcoin maxis, but again, compared to the traditional market, 3x in 2 years is unheard of.
Yeah, and like I said, I think if it's looking like the same patterns are going to hold out, we'll see outperformance of ETH in 2025. Hopefully that's not cope, but I really think it's setting up to be strong. So we'll see about that. And if Bitcoin can kind of just keep chugging along, albeit not as the leader of the market, but just kind of as a median performer, then I think we see a strong 2025 for altcoins. So yeah,
good. Anything else you want to look at?
Anything you want, but nope.
No. All right. Well, let's turn this off and kind of jump right into some observations. The first observation I want to make is it almost goes under the radar now, but it seems like the pace of tokenization is speeding up. Used to be meaning 6 months ago when BlackRock announced, I don't know how to pronounce it, but Biddle. That was a big deal. Now the news cycle is, the Bank of Germany or something used tokenized assets or used Ethereum or something like that to pay the Bank of Switzerland. And that basically made the news cycle for one day. and then something else came up.
Well, yeah, it's interesting because this type of thing doesn't make news in traditional markets because no one cares. And then in crypto, people kind of care, but not really because it's basically buy what token. And it's like, okay, you can buy the ZK token, which is the L2 on which this bank product was launched and executed. But how does it accrue value from this? And it's unclear, and it's not direct, and it's too long term because crypto has the mind of a goldfish. So unless you're getting the returns within 1 to 3 months, no one cares. And I think that's the reason for that. And I do think there's been generally an increase in meaningful tokenization developments because, to be honest, I have seen like the institutions are here, they're building on Ethereum since I've been here. This has been happening forever.
Yeah.
And I think it's been happening before I was even in the market. But I think it is more substantial now in terms of actual products being shipped, and BlackRock's Biddle is the best example of that. So I think we see that continue. And the tokenization move for traditional finance, tokenizing assets and moving the financial system onto Ethereum, onto blockchains, is a multi-decade process. So I think you just keep seeing these, and it's just an indication that we're still on the right track and making meaningful changes there. So that's my take.
So I want to follow up with you on two questions with that. So first off, we talked about Coinbase perhaps being one of the first real companies to tokenize their stock shares. So that's question one is how do you do that? And question two is where does that trade? How is that regulated? And then question three, I guess I have three questions. I want to circle all the way back to the Texas Stock Exchange. So talk to me about that.
I think you answered your first two questions with the third question. Again, I'm no expert on how traditional markets work. I barely know anything about the stock market. I don't know anything about traditional markets. I'm roughly aware of how they work and the processes with which these things happen. So it's mostly speculation from my end. But as I would think, you tokenize the Coinbase stock, they probably, if it's tokenized, then you should be able to bridge it between L2s within the Ethereum ecosystem. I don't know if they would allow like inter blockchain bridges, say like a bridge from Ethereum to Solana, just because of security risks.
Like it could get lost.
But then again, they 100% will have permission features. So it's just like USDC. They can click a button and revoke the token. That's 100% going to be the case. So maybe that will be allowed just because they have those controls. But I think they issue on base first, and then people build ecosystems around it, which is the benefit of these open financial systems. You can integrate it with DeFi, like Aave governance system has to allow it as a deposit as collateral within that, but you get the ecosystem built around it. And then let's say the Texas Stock Exchange, where this comes in is they will likely have, and BlackRock was one of the main components and builders here. They'll have some L2 presence. So maybe you send your Coinbase stock to an address on base L2 or otherwise, and then it shows up in your Texas Stock Exchange account. And it would work something like that. And then if you want to, let's say, trade Coinbase stock on New York Stock Exchange, somewhere where it's trading right now in traditional markets, then that would be more of a Texas Stock Exchange to NYSE transaction using traditional rails. But that's how I would see it working.
So let's unpack what you just said, because there's some stuff that seems like, oh, that's easy, that severely disrupts the traditional financial system. First one is, oh, let's put my Coinbase stock in Aave and deposit it there. So let's think about that in terms of things like margin accounts or home equity loans, where there's this whole freaking process you have to go through and pay at least exorbitant interest rates. So I'm going to give you an example. I have money at Vanguard, and they teased me with a margin account. And I'm like, oh, let's look at this. It's 11% interest. And I'm like, that's crazy.
Well, to be fair, Aave is that if we're not worse right now.
Oh, well, you're crushing me. But the point being, there's others that aren't 11%.
Yeah, sometimes, and it depends on like if you can get the size you want there and if the liquidity is there. But there's no permission required. You can take out more of the loan on demand if you have the collateral for it. It's instant. It's all of those things. So there are benefits for sure. Yeah. I wouldn't say the interest rate is like the main benefit, though. Over time, because it varies. Yeah, it varies, and we're in a bull market. But like over time, as the market matured, and like right now, the liquidity that we have in DeFi, even though it is large by crypto standards, is tiny. It's minuscule compared to the liquidity in traditional finance. So if you bring even a decent chunk of traditional finance liquidity, say 20% to DeFi, those interest rates are going to stabilize and should actually be in line with the traditional system, but just minus like the operating costs, and then you get 24/7 access, no permission required, and all of those things. So over time, that should balance out.
Should balance out. And the second thing, man, is you said something that was crazy. You said, well, maybe we can transfer the Coinbase stock or whatever, the tokenized asset to your Texas Stock Exchange account.
Yeah.
That kind of implies that you and I have an account on the Texas Stock Exchange. It's not like the New York Stock Exchange or NASDAQ where you have to buy seats. You can trade directly there.
That's right. I think this is maybe just me being a crypto person, but like I'm thinking of it, I think this is how it works. I think you won't go through a broker like how it currently works. It'll feel more like a crypto exchange, right? Like, because right now you send a token to the address on Coinbase, then it shows up in your Coinbase account. I think there will be variations of that, and it'll be a similar thing just for tokenized equities and stocks. So it'll feel the same as crypto. And honestly, I think like you have to know how to use the blockchain, but once that UX gets easier, I think it's pretty intuitive. Like, right, you have to learn how blockchains work, you have to learn how addresses work, but once the UX is improved and maybe augmented by these AI tools that are being built out, normal people will feel that as more intuitive. Because right now they think about an exchange. Like most people just go through a broker. They're like, I buy a stock through Schwab or whoever it is, and they don't really care or know much about the exchanges. And it's kind of confusing. It makes more sense if you just have an account at the exchange, and that's where you exchange financial assets. So I think it's pretty intuitive, and I do think that's how it works.
Yeah, so that certainly is moving up from the like degen with your ledger on a blockchain to the next level up of mainly a person that does their own personal investing rather than relying on an advisor. If you can click a button and said, it's, for example, Coinbase or my bank, there's a button that says wire money. All right, I click that button, I fill in the information, hit send, it goes there. It can be exactly the same on the blockchain. To what you said, which is exactly how mimics the existing way to do things.
Yeah, and I think like if you even talk to normal people, even normal people aren't even really controlling their investments or dealing with these traditional financial rails themselves. Mostly, they want other people to do it. They don't want to touch it at all. So like you just need to teach like the financial people how to use these things, and that's the extent you need to go. And other than that, like if you have retail investors who do want to be more hands-on, like you have Robinhood, you have Coinbase, and they're building out the products for them to do that. But as long as you can make it good enough and familiar enough for like financial advisors and people actually managing money, then I think that's the goal. And I think we're pretty close.
So you kind of mentioned this, Robinhood, Coinbase, Kraken. In the US anyway, and certainly Robinhood is expanding overseas, they could become leaders in that sort of quasi-crypto, quasi-TradFi space if they build out those products.
I think that's exactly what they're doing. And again, the one blind spot I have here is like regulation. What's legal in terms of U.S. financial regulations? And I just don't know. But like I'm operating under the assumption that those will be loosened significantly under the new administration with Sachs as the crypto czar, with Elon and with everyone in there, and they're very pro-crypto, obviously. So I'm just assuming that won't be an issue, and they're going to get rid of the onerous regulations and restrictions that have prevented this sort of thing.
Gotcha. So let's talk about Coinbase, for example. So Coinbase already has a futures product, correct? Is that what it's called? Or an options product?
They have futures. So you can trade futures contracts. You cannot trade perpetual futures on Coinbase US. I believe overseas you can.
But that is I looked at that. I used it very briefly. It's a traditional market making process. That's a traditional financial tool, trading futures contracts.
Yeah.
And when you buy and sell, that's potentially a traditional market making process, not a AMM type kind of deal.
They use order books.
Yeah. Order books, yeah. So what's to say that Coinbase can't just, if they get permission, say, all right, well, we are going to open order books on NVIDIA, Coinbase, whatever the first tokenized assets are, and let us trade through them.
I'm sure they will. They will. And then that's a direct competition with the traditional stock exchanges themselves. And I think like over a long enough time frame, they actually have the huge advantage because they have these intimate connections with the new crypto rail. So not only can you trade with order books and like professional market makers for these equities, which admittedly the liquidity, the experience is much better, and that's what you need for large scale orders in traditional financial markets. But then as they can build that up and offer that, they also have those connections to blockchains, and you get to all those permissionless tools that aren't really available in traditional markets. It's crazy too, because like another thing that you don't think about is how do you just send someone a share of an equity in your broker? Like you can't. It's very difficult. You have to go through multiple processes. I'm sure I've never done it. You could do that super easily if it was tokenized on a blockchain. So you get that, you get integration with DeFi, you get all those things. So I think they do have an advantage over a longer time frame, and they will be direct competitors with New York Stock Exchange, with others, as long as the regulation allows for it, which I'm assuming it will.
Yeah, absolutely. Absolutely. Well, that's great. So next thing I wanted to dive into, and everything we're about to talk about is not financial advice. Repeat, not financial advice. But one thing that we've both gotten questions about lately is how much crypto should I own? You know, and I think we have different perspectives because we're at different stages in life. But I think maybe it's worthwhile talking a little bit about that, about, you know, kind of where you should be. And I'll go first for the old person perspective.
Okay. The one thing I'll say before you start is caveat it. It's like, generic advice makes no sense in financial advising. That's why you go to a financial advisor, you talk about your risk tolerance, your goals, because just saying XYZ% makes zero sense, because it all depends on your cash flow, your liabilities, where you live, what your goals are, how comfortable you are with drawdowns, et cetera, et cetera, et cetera. So that's an initial caveat, but you can go.
Absolutely. So for older people that maybe have a portfolio that they are looking to move from their high growth type stocks to other more or other, what do I want to call them, other riskier, more aggressive assets, I would say somewhere between 3 and 5% initially in only Bitcoin and ETH is what you need max. Dollar cost into that. You know, that's assuming you have a portfolio that can generate cash flow so you can live or whatever you need it for. And it's very easy to do that now with ETFs. And in fact, I think there's ETFs coming out that just combine them both. So you click one button, you buy them both, and you're done.
Yeah. And if you're on everyone should be in this bucket, but if you enjoy tax advantaged accounts, you can now do that with ETFs with crypto, which is great. You've talked about that. We're going to talk with someone in that space very shortly. So
January 13th, I think we're meeting with, I got to look it up, but I'm going to guess probably the biggest, the guy that's running one of the biggest IRA / 401k / crypto native retirement plans in the US, where you can literally buy individual tokens. But that's even more complicated than we're talking about.
Yeah.
You don't even need to do that. The thing to keep in mind is, you know, you're making a bet there that, you know, you're going to get a small return relative to your overall portfolio. Yeah, you could have 100% run up, but it would only be maybe, well, if it's 100%, it'd go from 4% to 8% so you'd have less overall return. And that's the trade-off many older people are willing to live with, right? Mm-hmm. Now, if you keep it in there several years, maybe your 4% becomes 25%, and then you've had some significant return. But those sorts of ways are ways for normies to use normie type assets to get exposure to crypto, which doesn't involve nearly as much systematic risk. It involves risk of the coins, but not as much systematic risk, and gain that exposure. Yeah. Now, for younger people, it can be very different. I think you should go from your philosophy on younger people and where they stand and the downsides they have now in an inflationary environment and what your take on all that is, and move into where your investing regime is to where the normal young person, 20 to 30-year-old, should be.
Well, yeah, I mean, the first thing to say is that crypto's been the best performing asset class since it's been invented. And it has all of these tailwinds in terms of it's a new technology, it has native integrations with AI, and it's a relatively small asset class compared to basically every other large-scale asset class at this point. So it's just an area for growth. So over the next 20 years, you should probably own some of this if you're just doing like weighted allocations to the entire financial system. So just like that right there, if you take in like that as you allocate based on the size of the market and then add a premium for growth, you should have some significant allocation. And that's just the very beginning. And then after that, I would say that equities, stocks have become like a very safe, relatively growth asset in my view. Because like if you're playing in crypto markets, and I know a lot of guys are playing with meme stocks and just buying stocks on Robinhood one off. And that's more akin to crypto investing, and stocks aren't nearly as volatile. But if you just like invested everything into the stock market, a global or index, then you're probably getting between like 8 and 15% a year over every single year for the next 20 years. And that's great, but just basically where we are in terms of like the cost of living, in terms of the inflationary environment, our accumulating debt as a nation, that's probably not going to do it. So if you want to kind of juice your returns in financial markets, you should probably have crypto allocation. Those are just my initial thoughts. I don't know if you want me to give like a number, but like
so I want you to give a number, but I want to interject real quick. Implied in what he said is the fact that there's this general feeling that young people can't catch up with that traditional way of investing, because essentially inflation is growing, or I'm sorry, currency is being debased. We can talk about that however you want.
Yeah.
And for younger people to catch up and have a standard of living that their parents or their grandparents or their great grandparents had is increasingly difficult. So you need to look for assets that will outperform that 8 to 15% in a debasing type society. Now, I mean, you're very aggressive, and because you've monitored the markets with, and you've told me this many times, over 100% of your net worth in crypto
for a year, over a year.
Yes,
yeah,
and that's paid off. And I don't think even you would say any normal young person should do that.
No, you need to know what you're doing, and you have to be paying attention 24/7. It's my job, it's my hobby, so I can do it.
Right, and you were very stressed out. And sometimes,
well, that was because I was trading perpetuals, that's the last thing any normal sane person should do. Even if you're into crypto, don't do that.
Exactly.
It's not very fun. Well, yeah.
So, okay, for example, then, normal young person has their first job in anything. They have a retirement account or not. Is it? And I'm gonna throw out there, it should be somewhere between 40 and 60%, like Jeff Park's radical portfolio theory says.
That's what I was about to say. I was about to say probably between 40 and 60%. And even if it's not all crypto, just make it. You should make it future enabled businesses. So that's like AI, equities. Even like if you're not as comfortable with the coins, you can buy Bitcoin, ETH, whatever. But then you can buy Coinbase stock. You can buy these other things. And that just kind of leads me to the other thing. I also believe that the economy is radically shifting. Like AI has been getting a lot of attention, and rightly so. I think that's going to radically change how people live and work. And you should either have an AI future enabled job, so that's working in tech, working in AI, working in crypto to protect yourself against that, and or have exposure via your financial assets. And if you don't have one of those, let's say you're just like in a traditional work environment, and this is just my opinion, you don't have to agree. If you're in a traditional work environment, which pretty clearly could have AI do that job within the next 10 years, how about you have exposure to those secular trends via your financial assets? And I think that's one of the biggest arguments for crypto, for AI investments. And it's not just like a lot of people in crypto are trying to like accumulate wealth very quickly. You can do that if you're good, if you're paying attention and you make the right trades, and then but from an investor's perspective, these are decades long trends. And think of it less as a risky investment and more as a hedge against these trends that are automating away certain types of jobs and will continue to do so over the next 10, 15 years, and against the current economic financial situation in the country and kind of like the rising asset prices, the very inflated home market. And you can kind of hedge against that by making these investments. So I'd kind of flip it on its head.
Absolutely. And Jeff, we would love to have you on when we get a little bit more credible and talk about this whole alternative way of investing with you, because I know that you also advocate in your theory things like watches, expensive bags, things that hold value. And I'm going to say it, Ben, and you're going to laugh at me. High quality NFTs.
There you go. You capitulated.
I did.
You capitulated.
I capitulated. So, that's sort of one thing for everyone out there listening that may not be a degen in crypto to think about.
Yeah.
I want to segue from that now, and you hesitate to say it, but I'm going to say it. If you're in computer science at a mid-tier university, stop. Your job is going to be outsourced in the next 2 years by AI. All right. And I hate to tell you that all your student loans are going to be tough to pay off, but just stop. I've seen this. I've seen this code. I've seen it work. There's going to be very few elite systems people that are going to basically run multiple AI agents to create and update code, literally based on written specifications, is what I think.
Yeah. Well, just to build off that, I'm a research analyst first and foremost, but I study data science. I'm a mid data scientist. I would say I can do it, but it's not my primary focus or interest. And I can build full stack software applications already. So and that's just going to be extended to like the next tier of people next. Like regular business people will be able to build software applications rapidly. So unless you are this genius PhD level systems engineer, then I don't think there's going to be very much of a job for you there anymore. So we'll see if that pans out. But so far it has.
I think that's going to be an accelerating thing. That's not going to be a decades long. I think 10 years from now, it'll be like, what happened to all the software engineers?
Well, we just saw the results from OpenAI's new O3 model, and it had a significant jump. And the significance of that is they basically showed again that the scaling laws were upheld. So as they increased compute and gave more time to train these models and more data, it scaled as would have been expected. So you're not seeing diminishing returns with the models. And if that continues even further, they're going to be very, very smart very soon.
Exactly. I'm going to hesitate and not get into our discussions we have about the elite universities versus the elite technical universities.
Yeah, we'll stop short there.
We'll stop short there. That's another time. But one thing I do want to bring up is the whole idea that, well, maybe it's my idea, but I strongly believe that the combination of AI and crypto is going to fuel the American exceptionalism dream for another 2-3 decades. And here's my context. So my earliest memories were growing up in the 70s, stagflation, high interest rates. There was nothing really to speak of. In the 80s, Reagan came in, and the way that I'll say this, that he won the Cold War, was he invested heavily in tech, and the Silicon Valley tech infrastructure started. And that was a first huge wave of expansion where technology started to help increase productivity. That begat internet in the 90s and 2000s. And now with AI and crypto and what I believe will be deregulation of both in the US, you have not one, but two like canonically life-changing technologies happening at the same time in the same place with what amounts to infinite investment money to spur them on. There'll be lots of failures, but this is what the U.S. and the U.S. venture system is very good at doing. So I'm very excited for the next 10, 15, 20, 30 years. And I'm also very excited that I hope we come up with a reasonable immigration policy to continue to let the smart people in to help fuel this. Because there's not enough. There's 7 billion people in the world. There's 300 million people in the U.S. There's a lot of smart people out there that we need to get in here to help us, do this sort of thing.
Yeah, I think so. And I think the good thing there is that, regardless of what you think about the political party, the president, whatever, we do now have it being normalized that there are builders and entrepreneurs and businessmen in Washington, which wasn't the case for a long time. And this is actually how the country began. I read a very good point. Like, none of the founding fathers were career politicians. They were revolutionaries. They had their own businesses. They made their own money. They were writers. They did all kinds of things. So I think getting away from career politicians, or at least having more of an influence from people in the real economy in Washington and communicating what is needed and communicating that all of these regulations are stifling innovation. We're going to lose our strategic position as a nation if we keep ignoring the sectors that are driving growth. I think that's really good. And this is the first time we've seen that in a long time. So I think that's overall really good. And I agree with you. I'm excited for the coming years because I think we are going to see a real boom in technology in the United States.
Yeah, absolutely. I'm going to talk about two people in that context. Elon Musk. People are like, what's Musk doing? In the U.S. last week, he essentially scuttled a bloated pork-filled spending bill. People got pissed about that. But in any other industry, I mean, you guys have all heard this. You want to surround yourself with people smarter than you. And why is the government different than that? Clearly, he's a smart guy. We may not like all his ideas, but he's a smart guy. And in Washington, and Brussels, and Hong Kong, and wherever, he's the only guy in the room that can't be bought. He needs no money. No matter what regulation happens, it doesn't matter to him. He's the richest guy in the world, and he's smart. So let's include him. And then the second thing is this RFK guy, who I sort of think is a crackpot in some respects, but I also think his focus on healthier eating in the U.S. and things like that is right on. The beauty of a guy like him, though, at least for smart, educated people, is we can ignore the stupid stuff. I mean, if he doesn't want to give vaccines, you don't want people to do that. Well, I can choose what I want to do. But if he is going to generally help get crap out of food and lean up America from our bloated selves, I think that's a good thing. And I think what that leads to is it's going to put more onus on the citizen to make decisions about their life.
Yeah, 100%. I think overall what we have is just a cultural move more towards progress and opposed to infighting is what it feels like. Because for a while it was infighting and there was just a lot of this going on. So yeah, overall I'm excited about it. I think huge years for tech and yeah, pretty bullish about what's going on.
Cool. All right, last thing, and this is going to be your call if we want to talk about this or not. So there is a race war on crypto Twitter now.
Yeah, you kind of mentioned it. It's with the immigration policy stuff, and I'm not sure about it. A new term I haven't. It was really just the last few days on Twitter, and it's not just crypto Twitter; it's like tech Twitter too. It's about particularly it's focused on Indians coming to America and getting H-1B visas for tech jobs, basically. And there's a huge subset of Twitter apparently that is like upset by this, and people are calling them the woke right because it's generally like conservative tech people who are mad that those jobs are being filled by immigrants, I guess. And this is the extent of my knowledge. So I haven't followed it too closely, but this is an ongoing discussion. I don't know if you have any thoughts.
So it seems to me that there aren't enough smart people in the U.S. that'll do that job. I'm going to guess that these immigrants aren't getting paid less than Americans would get paid if they were qualified. So again, getting back to the thing of let's just get the smartest people in the room. And I'm not going to say that when I had a company, it was some like bastion of liberalism. But in our company, we had 2 Indians, we had 2 Asians, we had a redneck from somewhere in Pennsylvania that was freaking smart as hell. We had Cornell guy, we had Indian from USC, and we had a black dude who was gay. So we had all these things come together, but the common factor wasn't the freaking color of their skin. It was they were smart AF.
Well, it's interesting. Yeah, I think you point that out. It's weird coming from the right, or calling them the woke right, because it is like meritocracy.
Yeah.
And it's interesting because that's like what they were complaining about the left doing forever, which they were doing. It was basically everything was just identity politics and in group A versus group B. If you're in this group, then you're good. If you're in that group, then you're bad. And they're just doing the same thing. And I think that's a disservice to America. I think we should just focus on individuals' skills and try to level them up. So interesting conversation. I do think it's interesting. There is definitely, and people would it's interesting. This is really off topic, but the media would try to say, look at Elon's Twitter. There's racist posts like blaming him like that's a bad thing. No, the freedom of speech allows these opinions to be aired out and for people to talk about them and see them. And so we can discuss what's right and what's wrong. And there is actually like a lot of latent racism in Twitter and just people's opinions. So being able to see it outright and just have it out there so that we can debate it and clearly show like why this is wrong, how it's against the core American values of individual sovereignty, self-determination, et cetera, the better. And I think this is just an example of that happening. So I'll give another point to Elon there. And if anyone tries to frame it as look at this race war, these terrible people on Twitter, Elon is racist now or something, that's the wrong take. It's just completely wrong. So I think that's just an interesting phenomenon. And I think we keep seeing this happen. So as long as people keep talking and that's put out there, I think that's great.
Yeah. So something popped in my head, and this might be controversial, but I'm generally of the belief that you should enter the U.S. legally. And I don't know what to do about all the people here. I'm not necessarily in favor of deporting. I don't want to get into that. But at some point, there's going to be an issue where these people that come to the country illegally do jobs that Americans don't want to do. So how about this idea? If we cut that off and we start to see a, what do I want to say, lack of people willing to fill those jobs, let's take Americans that are on welfare and give them those jobs at those pay rates, and take the amount of money that they're making there and subtract it from their welfare. And if they don't want the job, then they got to do something else.
Maybe this is the beginning of your politician arc.
Yeah, I've literally, we talked about there. I've thought about that. Like, I don't want to deal with the bullshit to get elected.
Yeah,
which sucks. It's awful. But like, being able to think independently and outside the box, I think, is important, and I like doing that.
Yeah, and I think if hey, you're a crypto guy, there's a lot of crypto money. We saw these previous elections. You never know. You might not have the hardest time fundraising. So if you want to see a internet capital, I don't know, maybe state congressman run.
Let's start with that. And I think maybe do that and make Charlotte the new crypto center of the New South.
We'll end up with that. Yeah. Well, hopefully, I'm moving down there in about a week. Again, if you're watching this, maybe someone else. If you're in Charlotte, let me know. We'll meet up, and I think there's a lot we can do down there, and I think there is power in getting. I think crypto ideals are very American. I think the core tenets of the technology and the people involved are very libertarian in some respects, but very American at the core. And so I think the more that we can explain why this is a good movement and spread these ideas, the better. So I think the more people can meet in person, the better also. So yeah, let me know.
On that note, and we'll go, but what was Balaji's book, Nation State?
Yeah, it's what's it called?
Something State.
The Network State.
Network State. So Mr. Balaji, if you're out there and you're watching this, I'm not sure you subscribe, but you should. When my wife and I move down there and have our compound on Lake Norman, I want to be part of the Network State. I want to put a little Network State flag up and be part of that.
There you go.
All right.
There you go. You can make the compound a official part of the Network States. I'm not sure. I know there's like a leaderboard of Network States out there. So I think you could look that up. But yeah.
All right. Well. All right, Ben. Last show of the year. Thank you all for supporting our endeavor this year, show 29. Probably next week we're going to be off because you're literally going to be moving, but we'll see. And we will see all of you in 2025.
Yeah, strong 2025. Lots to look forward to in crypto. I think it's going to be a crazy year overall. We'll see what the coins do. I think there's a lot exciting going on with AI crypto. This was just kind of end of year recap, broad-based themes in America and tech. So I think we'll get deeper in the weeds in crypto narratives moving into the new year, and we'll see if our predictions play out, which were ETH outperformance. We think we see big DeFi moves. We think we see more growth in the AI crypto sector. So I think it'll be fun.
I'm going to go on the record. ETH at $6,250, $6,250. Bitcoin at $182,000 at some point during this year. All right.
I think you're low, honestly.
All right.
I think you're low.
Fair enough.
We'll see it. All right.
Over and out. See you, fellas.
All right.